let's look at the questions your company and some of your solutions work with, especially the legacy finance parts of like you mentioned, banks, exchanges, governments, which you work for, and all this innovation, because you guys as well are on the cutting edge of AI and blockchain.
Yeah, I mean, with that, you see, APIs are very much going to continue to exist. So, if you look at open banking, which is API driven, and you look on the exchange and trading side, there's something called fixed protocol that's used to transmit orders and trades as well across the market. So, and now both on the crypto side, but also on the standard banking side, there's REST APIs as well. So we're saying APIs aren't going away anytime soon, and traditional finance, or TradFi as I call it, will exist. Coupled with that, you've got a lot of crypto and digital asset exchanges. They're actually centralized finance-based exchanges, or CeFi, which means they run centralized platforms, and then things may settle on-chain as well. So you've got a combination of off-chain activity and participants that want to get access to the asset classes, but don't necessarily need to be on-chain. And even if you're on-chain, then the question is which blockchain? And on the other side, obviously, you've got these multiple blockchains and decentralized finance, or DeFi, as I call it. So I think, with all of this, it's interesting. We had a call today with a government that wants to introduce a wholesale central bank digital currency, and before they move into the retail space. And the argument is, okay, we want a private permission ledger, but we realize that actually we can't ignore public blockchains. I think a few years ago, all the banks dived into projects that were private ledger based. Think of it as the old intranet, but are very quickly realizing, of course, for certain uses, that's great, but actually they really need to, like the access to public internet, they really need a wider degree of access to public blockchains as well. So there's going to be a combination of these technologies and convergence. And as you rightly said, AI and blockchain is interesting because everyone talks about blockchain-based smart contracts, but really recently there's been some flaws. I mean, not in necessarily those contracts themselves, but the fact that they're using centralized oracles for a decentralized construct, and it's only as good as the data that comes in, which is sometimes garbage in, garbage out. So I think that there's room for improvement there, and we're seeing data analytics and AI combining with blockchain as a real opportunity. One example, just for those listeners, is the fact that there's something that we're doing that we'll announce in the coming months, where we're looking at sustainability, and we're looking at carbon credit markets, where there's double counting of credits and fraudulent credits as well. And using technologies like AI and immutability with blockchain can really help address that, and then help provide wider market transparency on the marketplace side as well, and bring together disparate marketplaces and participants where the market's fragmented, and knit that back together.
So let's look at, so from, I don't know, probably you can use a case study for people listening to us, because I know that we're going to do technical, and you and me can go technical, but for most of people, probably they don't even know what is an API, or where is a decentralized exchange or a centralized exchange. So let's go for a definition of these two things. And I think you are probably the best person to do this. And I think it's really important for people listening to us, because I think one of the biggest challenges, especially what is happening in the markets, is that we're talking about, for instance, the case study of FTX, which is probably the biggest in a long time, actually. Not actually as big as the Prime Minister of the UK, that actually stole, at the end of the day, made a bug of 40 billion pounds in the British economy. So if you look at that, and actually we all will pay, then she will not go to jail, or anyone in the government. But I just want to use the parallel, not in any political, but just for people to be responsible. If someone does a damage of 40 billion pounds, you cannot just get out and get someone has to have responsibility, because of course, in the case of FTX, there's a lot of big things, but I don't want to make this about present, but I just use this as an anecdote of the complexity, because FTX was a $40 billion company that just went bust, and actually took with that a huge part of the crypto world. But if you look at what the last Prime Minister and Minister of Finance of the UK was, 40 billion pounds, which is bigger, and it was done in the space of 1 month. So I just want to highlight that the parallels between crypto and the real finance are not so different. But well, I just want to go right now. So let's look at, how do you define an API for people listening to us? Of course, you can always search in Google.
Yeah.
But I think it's always like and as well as centralized versus decentralized exchange. And as well, I know that's two questions, they're quite big, but in a summary, because you probably can answer that quite fast.
Yeah, so API, or as it's defined, application program interface, is effectively a messaging standard. So much like you and I are now speaking in English, or someone else could speak in French, it's a communication between one platform and another using some form of messaging. And everything we do there, for example, when you enter payments into via your mobile app or via your desktop or laptop, then something happens at the back end. It's an exchange of messages in terms of what you're communicating and then the system that's processing them. So that's an API. Now, in terms of centralized exchanges, it means effectively buyers and sellers coming together on some form of centralized platform, or it could be a marketplace. Let's say your everyday users maybe using Amazon or other equivalent platforms to buy. Well, you can buy pretty much everything these days. It started with books, but there's groceries too now, and that's a centralized platform where there's one or more sellers, and then on the other side there's buyers, which could either be business and related buyers, i.e. corporates and companies, or it could be retail buyers as well. But they're all coming together on a central platform and buying and selling. And a lot of the crypto exchanges out there, the major ones like Coinbase, Binance, that's a form of centralized exchange, much like for different purposes, the Amazon example. Decentralized finance means that it's much more distributed in that there can be lots of individuals that now want to interact with each other, but they're doing that through a smart construct called a smart contract, where they can exchange data between themselves, whether it's prices, whether it's the need to buy or sell, and the smart contract then locks in those buyers and sellers, which could be anywhere as well. And so it's much more distributed, very much less centralized, and can be used as a mechanism, now from this Web 2 construct that's more centralized to move to Web 3, which is more decentralized.